Hello and welcome to Zee Commodity Capsule. Gold prices fell slightly on Friday, remaining under pressure from stronger dollar, which was hovering close to two-week highs, as investors scaled back bets on more US interest rate cuts before a hotly anticipated address from Federal Reserve Chair Jerome Powell in the Jackson Hole Symposium. We saw gold futures for the current contract in COMEX hovering close to 33.70, 80 odd dollars an ounce. Losses in gold were, however, limited by safe haven demand, which was in play amid the increasing signs that a Russia-Ukraine peace treaty will not be reached anytime soon. Having said so, focus is now, as I said, squarely on the address by Fed's Powell at the Jackson Hole Symposium. Along with this, investors will be waiting to see whether Powell will address the recent data showing mildly lower inflation and a cooling labour market. Fed chair has cited uncertainty over inflationary impact of President Donald Trump's trade tariff as the biggest point of uncertainty for the Fed in lowering rates. Oil prices were little changed on Friday. In fact, we saw that oil prices slid a bit after having touched near two-week highs as hope for immediate peace between Russia and Ukraine dimmed. It provided some support on the downside to crude prices. This has increased the risk premium demanded by the oil sellers and has put prices on track to snap a two-week losing streak. We have seen Brent crude prices slipping to stay closer to $67 a barrel. Both contracts climbed more than 1% in the prior trading session. Brent crude has risen nearly 2.7% this week, while WTI has gained more than 1% so far this week. Traders are pricing in more risk as hope that US President Donald Trump can quickly broker a deal to end the Russia-Ukraine war, which propelled a sell-off in oil over the last 2 weeks. UBS meanwhile expects Brent crude prices to stay in the upper part of trading range of $60 to $70 a barrel for now. Base metal complex were hammered into a tight range with focus on the Fed's annual symposium in Jackson Hole and Powell's speech on Friday for US interest rate policy cues. Meanwhile, we have seen global refined copper market showed a 36,000 metric ton surplus in June as compared with May, wherein it was in a surplus of 79,000 metric ton. Meanwhile, we have seen Goldman Sachs says that defense boost implies upside risk to their 2026 and 27 copper price forecast of $10,000 and $10,750 per metric ton. Arabica coffee has extended its decline for 7th consecutive session and has surged to now 3-month high, supported by speculative buying amid low inventories and disruptions caused by a 50% US tariff on Brazilian exports. Malaysian palm oil now hovers near 4,500 Malaysian ringgit per ton after 3 straight sessions of losses, supported by weekly ringgit, supported by a weaker ringgit and gains in rival Dalian and Chicago edible oil prices. Sentiment was lifted by strong export expectation. Meanwhile, we have seen that the Malaysian Palm Oil Council expects India's demand to stay firm in September as importers stock up ahead of Diwali festival.